Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome back everybody, guys. So let's take a look traditionally on the gold market on Sunday. Gold market right now stands really tough, and not only gold actually, so markets across the board and stocks, forex market. Well, and overall background on the gold market is really very interesting. At least it suggests strong activity in the nearest few months, probably till the new year. So lots of factors that stand beyond the current price actions. One of them is, of course, the president elections in the United States. And in a weekly report, as usual, we have tried to make assessment of the sentiment on the market, most important driving factors that currently investors are watching on. And overall sentiment, what particular top analysts expect on the market right now. So in two words speaking, if you do not want to read the report, the major driving factor that market stands extremely sensitive to is new liquidity pack, new liquidity measures. That's the cornerstone on the current headlines, speeches, analysis, thoughts. So everything right now is turning and twisting around the new pack of the liquidity. That's most important factor for the gold. And existence of this factor keep chances on upward reversal in the gold market, although these chances are not really high. And as technical pictures, fundamental picture mostly suggest that we could get the deeper retracement in the medium-term perspective, so retracement could last till the end of the year, because currently the major opinion stands that we will not get any additional measures, I mean new liquidity packs, until the end of the year, until there will be clarity on the president elections. Until this moment, hardly some new fiscal support will be agreed in Congress. But at the same time, this factor becomes very important, because if it is not priced totally in, and if somehow the new pack still will be released earlier, that could be really explosion action on the gold. That we will keep an eye on. At the same time, technical picture and overall fundamental picture suggest that the chance of this early reversal and providing of the pack stands not very significant. It's more probable that we will get deeper retracement. So details you could read in the weekly report. Second moment is what the nearest standing target of this possible drop. So mostly analysts talk about 18 even, 1850 range as the first destination of the gold market. And what actually we also have on the chart. So currently, major opinion, the common opinion is that market stands just in a temporal retracement. Overall long-term driving factors are valid. And I would say if market even drops somewhere to the 16 even area, that will not be the strategy. This will not break the long-term bullish tendency, because on the monthly chart, as you could see, this will be just the 30% retracement. It's normal after reaching of the major monthly CLP target. That's particularly the level that we will keep in mind. But let's go step by step. So for a long-term analysis, it's also interesting, and it's even more interesting than the intraday chart and the daily chart. You could read the report. For the daily picture, here's what the trading plan that we have on the table. All trading plan stands around 1836 support. This is major weekly support. And that's also accompanied with the weekly oversold level. And as you can see on the daily, this is not just a separate level, this is conference support, 1825, 1836. And around of this level, we have a lot of different extensions. First of all, this is major OP, So here we're coming back to this target. As we said a week ago and within the updates, that once market will take out of these lows, it destroys the light bearish scenario. So light bearish scenario suggests it's drop and reversal right back up. That scenario currently is destroyed. And the next level that we'll keep an eye on is particularly this level. Here we have the butterfly extensions, 127, and the major OP is 1802. It stands slightly below this level. So here, if you intend to take the long position on this level, keep in mind that this target stands below the level, and you will have to place stops somewhere below this level, because occasionally there could be some spikes here that market will take to complete the OP. Hardly the real and strong downside breakout is possible, because we also oversold on the daily and weekly chart. So something really amazing should happen just to show the real downside breakout. For example, some superb non-farm payroll should be released on Friday, for example. To this happen, other things will remain equal. Market probably could reach this level this week, but OP probably will be hit by some spike, maybe volatility on the data release or something of that sort. Potentially, this level provides good opportunity for moderate pullback, somewhere to maybe 19 even, and or even higher. This pullback could happen, some reaction at this level. That's what we will work with on this week. That's what things that we will keep an eye on. On intraday charts, guys, it's not too much to say, because actually setup on the intraday chart has more tactical purpose. It makes no impact on the major context that we have. First of all, take a look at this minor ABCD XOP stands in the same area, 18 or 9 approximately. So it agrees with this range that we're talking about. Currently, market stands at 1618 extension of the butterfly. It's minor butterfly, but still it has chances to show some minor pullback before downward continuation. And you could use it differently. Short-term traders who are considering hourly charts, 15-minute charts, here could be the double repo buy, for example. Take a look. For us, it's not bad. You could consider this A, B, C top OP that stands slightly below this area, so where the second bottom of this pattern could be formed. And if reversal will happen, that could become the bounce somewhere to the 19 even, 1892 confidence level, or somewhere right here. So this is changed to scalp long trade. If you, of course, brave enough to take the long positions when you have this context, it stands against you. But still, theoretically, this chance exists. Second, those who are searching chance to go short with the extension to the downside, that also could be the level that you could consider. 1892, 1914, these two levels that you could keep an eye on. This market could retest before downward continuation. Finally, those who have taken the short positions right here, this in our first area, if you remember, we discussed it in the last week, 19 even, that was support cluster that we considered the OP target, and this level where we intended to take the long position. If we're taking long position and was not able to move stops to the break even because the pullback here was not bad, and you have longs, but you would like to out of this trade, that will be a good opportunity for you to consider this, to make a regrouping of the positions and take the position later on better levels. Not the chance to close the existing longs if you would like to take them a bit later. So that's the intraday stops that we have. But of course, the major stop stands around 1896, and that's what we will intend to play around in the coming week.